Great. Hey guys, Markets with May and AMC earnings call. I got so many requests, and usually I would give it a little bit more time when there's just this much that's going on. But here we are. We're going to just do it. Um, the earnings, I want to kind of just go through this and really make it clear. Like, if anyone was thinking that I was thinking this is going to be a great quarter, definitely I didn't think it was going to be a great quarter, but there are some real highlights for you. And then I wanted to let you know that Dave is on the call with me, so he's going to do more of the trading side of it. Remember, Markets with May is about telling you what actually was said and then just how I'm thinking about it, and you make your own call thereafter. But overall, I got what I kind of was expecting on this call. The street, I believe I saw some articles that said it came in better. Other people think it came in worse. In fairness, I'm going to start sharing my screen. Past performance is not indicative of future returns. I am long APE. I took off my long calls that I was using just to hedge the APE on AMC, but I am definitely not doing anything else crazy as relates to that. But I wanted you guys to understand, um, you know, here are the major points that I was anticipating. And again, being a shareholder of APE or AMC, in both cases, the point is to be aligned with the company and what it is that they're trying to do. And so this like weird AMC versus ape situation scenario that has transpired is in so many ways the hedge funds trying to divide the shareholders in a way that I think is really malicious, to be fair. But unfortunately, the suits are going in exactly this very bizarre way, which I will try to address at the end as well, because so many of you are pinging my comments with with that stuff. So I want to give you guys some resources that I think are really, really great as you guys try to think through those concepts as well. Okay, Q4 was known to have been weak. All the news is really about what's happened in January and February. And so it really should have been about January and February news flow if you were thinking that upside was going to happen. And for that, I will actually give again a shout out to Tony Denaro, who I think does a really good job keeping up with certain things that are really kind of key if you want to understand what's going on. And that namely is what's actually going on with the box office. And he posted that, I want to say, like just on Jan 1, like it was New Year's weekend, and I watched it and I thought it was great. And that's when I really started to give him a subscribe. So I will give him some shout out. Like, in fairness, I don't think he knows who I am from Adam. So that kind of is what it is. But, hey, I come from a background where if I didn't do the work and someone else did, I give them credit. So that is what it is. Okay. The point of progress that I was looking for was, number one, are they starting to monetize the brand? And namely, we got that. We got that even before the call, which was the AMC popcorn announcement, which I think is a big deal. I've talked about that in past episodes, and the idea that licensing revenue and asset light as a concept was the way to go. They also told us a few other things that they were doing on asset light on the call, really one thing in particular. Also, they gave us an update on the theater environment, which is what will drive earnings in 2023. And they namely said very early on in the call, it's really going to be in the transcript because it's not in the 10K and it's certainly not in the 8K. So the documents that just came out, and that is that they anticipate the theater environment to go back to the way it was in 2019. So last year, depending on how you do your estimates, about a third to a half the number of blockbuster films came out. Those are films that net 100 million or more, and they're thinking that will increase back up to the normal number. So they're saying it's a 75%-ish increase that they're anticipating, and that's what's going to drive the upside on ticket sales, butts in the seats, and so on and so forth. The other thing I was looking for was what precisely is going on with debt reduction. And so I'm going to hit those points and then talk about a few other things that I know you guys care about. So here it goes. All right, next slide. Let's just briefly review the quarter. It looked the way we would have anticipated to look, which is revenue was down 15% versus last year, 2021. Operating loss was up. A lot of that had to do with D&A and the impairment of assets. If you back that out, you get still a minor loss relative to 2021, but there were a few more movies that came out in 2021. That's why the revenue number is so much stronger. And then the net loss number looks bad, as you would have expected because of the impairments. It's really more or less in line with what was going on up here. corporate borrowings, a lot of the stuff that they're doing as relates to retiring of the debt doesn't really start to hit any of the financial statements till next quarter. So you kind of got to look through the financials and figure out how you want to think about that. So but before we do go to balance sheet, let's just talk about the mix of the business and what they showed us. I thought this was a great breakout. And what we're seeing is that the US business has some benefit over and above even the international business. Now, the US business is, you know, what do you call that? Like 60%, 65%, almost 75% of the business. Quick math, 33 divided by 50, 66, that sort of thing. So call it 70% of the business. And then international and also in the US market, you're getting a higher average selling price and you're getting more dollars spent each quarter. And the way you look at that is that this was the annual number for 2022, which is higher than 2021. But because the quarter number came in even higher, you have to think it's dragging up the number. So we are seeing that kind of sequential improvement, both in what people are willing to pay for a ticket and also, you know, how much they're willing to spend in the US in particular. Now, internationally, you did see an ever so slightly higher ticket price, but less spent on food. And the way I think that you should interpret that and think about that is the fact that you do have FX that's traveling in there as well. So, you know, some of that is what it is. I wanted to also mention this announcement that was in the release that was in kind of a different section, but I think is very relevant for this. And that has to do with Saudi Arabia Entertainment Ventures, which is doing a $30 million a licensing deal. So, you know, basically, I love this, and I think that they should do this more internationally because it's just fee-based revenue, and then you can just deploy capital from that. It's typically, when it's done in different businesses, it's very reoccurring, and then you can deploy capital not to your international business. You don't have to worry about the operational fluctuations because whoever's licensing it from you is taking that on to their business way of doing things in their local currency and managing it that way. So I hope to see more of these international licensing deals because I think they're the right call in the current economic environment that we have, where inflation is really hitting every country a little bit differently. And I think that's going to be accentuated in the quarters to come. But I was actually pretty happy with this, especially given that there were definitely less movies that came out in Q4. Now, average screen count, even though you see, I mean, that's kind of a wash to me because you do see an increase over the year in the US markets with some of the Odeon stuff, et cetera. But over the quarter, they did close down some locations, and that is hitting the balance sheet and the income statement with some of the below the line stuff, impairments as well. So you're going to see that in a couple of spots when you're looking at the financials. Okay, but I told you guys the other day, what I care about is cash flow because I need to know that they can make it through. And if I care about cash flow, what I care about is a couple different metrics. But what I loved in this particular release is he gave us free cash flow and he even broke out maintenance, CapEx, et cetera. So if you're a Buffett style person, you can actually do the math, which is kind of cool and not have to worry about it so much. I don't know if he does that every time and I just didn't notice it, but he definitely did it this quarter. So let's take a look at what he said. Now, EBITDA, by the way, I usually use that a lot because a lot of people don't do this breakout. And so then I have to use EBITDA just if I'm trying to do this quickly to get this out to you, you know, a couple of hours after the call ends, realizing I also have to put together slides. Okay. It's not the most straightforward thing. If you look at EBITDA, you are comparing over the quarter, then you have to make adjustments for depreciation, amortization, and then impairment. Okay. And once you do those adjustments, you see that EBITDA is slightly positive. And I'm okay with that. If you go back to my call December for the last quarter, it was really this fact that they're dancing around positive cash flow, positive EBITDA that got me excited about them because this is a turnaround. That is what we were looking for, is to see that portion start to start to actually have cash so that they can start turning the company around, paying back debt. Okay. Let's look at some of the other things. This is the cash burn and free cash flow metrics. Since I didn't do anything with that, I'll delete that. That we saw, and you can kind of see their operating cash burn or cash gain is actually improving dramatically on the quarter. Okay, versus last year, they just had a good year. It is what it is, but kind of see that given that the whole year had this negative cash burn, and this quarter wasn't a cash burn, and we had kind of weakness in the business, I'm actually kind of okay with that. I'm not super ecstatic about that, but given that I knew this quarter was going to be kind of nasty, this was actually better than I expected. I thought they might come in with a negative number there. Free cash flow though is still negative, okay? And then you can see that it's a mix between on the capital expenditures, which is 72 million of that. More than half of it is maintenance CapEx. You can't avoid maintenance CapEx. The only thing you can do is either take an impairment and sell that portion of the business, or alternatively, really there's not much you can do with maintenance CapEx except for sell that portion of the business. Growth CapEx is the other 37 million. Some of that is going to be this popcorn stuff that just happened, which I'm comfortable with because I think it is the right call. I do think that that product's going to do really well. And I think it's going to be really exciting to see. I mean, I tried to buy some, but look, I'm in New York City. There are no Walmarts in New York City. Then I tried to buy it online. Walmart isn't offering it online. So I think what they have to do is actually ramp up production so that it can start to be offered in these other ways. But I'm really actually pretty excited about it. So some portion of that growth CapEx is probably making some room for the popcorn business. The analyst didn't ask that. I have no idea why the analyst didn't ask that. It's kind of a weird call this quarter. I don't know if he needs to have just more analysts on the call or even take analysts that he just likes from the internet. That would be cool too. Either way, but it wasn't asked. So I just have to make that assumption for right now, which is probably an assumption given that that is a brand new spanking business. Okay, so I'm okay with this. It's not great, but since I thought the quarter was going to be pretty rough, this actually was better than I expected. Okay, now, before I move on, I want to make this really clear, and I will circle back to this. All of the people that commented so nasty in my comments about how like Allegheny had every right, realize that when they're calling fiduciary duty, and I keep responding to you, hey, he also has a fiduciary duty to keep this company from going bankrupt. This right here describes what I mean, okay? If he's still free cash flow negative, then he does in fact need the capital. So all this, just keep that in mind for anyone that's coming at you in this strange, bizarre way that I've never heard of before in thinking about fiduciary duty. But I'll get to that later as well, because I know I had way too many comments about it, both in Twitter and in my YouTubes, not to at least give it a little bit of time. Okay, next thing, balance sheet. Balance sheet is very, very important because what we really want to see is what's going on the debt side. He's got to reduce it. And it's a little bit hard to see through all of it, but you can see that he reduced corporate borrowings, which is the bottom, this lower area right here. I don't know if you can see my little mouse, but it went from 5.4 to 5.1, which is a $386 million reduction across all of his debt. And I'm sorry, I'm saying this wrong. That I didn't do the math there. So it's about, call it a little bit less than 300 million, 280 million in corporate borrowing reduction. When you're looking at working capital, and this is yet another thing that is why we keep saying he does actually need the cash. So these arguments that he should do with the shareholders stay at the expense of this company potentially going bankrupt, I think are insane, but whatever, we'll see. We'll let the courts decide. But working capital is still slightly negative, okay? 902 is current assets. 169 is current liabilities. To me, you should remove deferred revenues and deferred incomes because technically that is a very bizarre type of liability, which means you just can't book it until it actually happens. So it sits in liability because you owe the services associated with it. But removing that, you have a little bit of a working capital gap for next year of 386. Now, how is he going to make that gap? I don't know the answer to that, but I'm thinking, given what we're hearing on the call, it's a mixture of starting to see the revenue come from the popcorn as well, which I know a lot of you guys aren't sure how much that can be. But quite frankly, if you look at the EBITDA multiples that a popcorn company gets and the snack business gets and how much they're bought for, it'll make more sense to you. I'll have to do that as a separate video. The other thing is that the movie business will just improve this next year. And we're already seeing a lot of that in the first quarter. So what we'll be really looking for is sequential improvement and specifically improvement here in working capital, just so that we can see that he can get through the year or get a very strong sense for what's going to happen with the dilution. Corporate borrowing I did right here was down 5.4%. And that's a big deal because honestly, given that this wasn't a good quarter, he had to do that through we'll call it creative financing, but in fairness, it was like when you read through the debt section of the 10K, you're like, wow, people worked very hard all last year. That is some serious banking. Operating lease liability also decreased dramatically. And some of that and some of what he talked about in the call is that he had a lot of rent that he owed that he hadn't that was deferred rent that hadn't been paid, and they paid it down so that they would reduce that liability. So it's just progress that we're making on the balance sheet that I think is pretty cool personally. All right, let's see other debt updates. This one is a little bit detailed to just show you very clearly where you should look. Okay, and this is from the 10K. And it's a note 8. You can see it, corporate borrowing, finance liabilities. And most of what happened here, which you will see in the notes of the Q, but also it's written, but it's just much longer form that it's written in the 10K. Most of what he did was he extinguished that debt by the fact that it was trading at a much lower rate. So like, for example, he bought back 66 million of debt for 36 million. And that's how he used the financing proceeds. And then you can kind of see where the debt kind of crosses. And overall, you still end up with about 300 million less in the carrying value of the debt, which is pretty freaking impressive given what's going on both in the environment of finance of the economies of, in the US. It's impressive because basically the high yield corporate market is closed down. Let me just say it as simple as that. No one's giving high yield debt right now. So to be able to refinance in a market where the bankers aren't lending is a big deal. Okay. Let's just call it what it is. Maybe they're lending, but it's not really in any kind of meaningful way. So this is awesome in my opinion, but there are others that may not share my opinion. You know what? If you don't share my opinion, cool. Start your own channel. That's what I have to say, all right, next. This is the term structure. So a huge component when you're reading through, if you're doing your own due diligence, realize that it's not just about lowering the debt outright because you bought it back for really, really cheap. I have a video on that. It's also about the fact that you don't owe the principal right away. And so a lot of the debt was in fact termed out. In every 10K, they will always have something that shows you how much principal is due and the year in which it's due. And you can see that if you read through the notes, a lot of what he refinanced was 2024 and 2025. And some of it was 2026 as well. But you basically have 60% of the debt due on 2026 specifically. I wrote this wrong. Apologies. But so 3310 divided by 49, which is what they have on the debt term structure right now as it looks. And that's how you get to 66 for the, so you've pushed it out. He's bought himself time on the debt side of it to not have these massive, huge payments. And there's two things that can happen there. Either we can keep having this stupidity and he starts to get some positive cash flow situation where he keeps getting to buy it back at a fraction of what it's worth. Or alternatively, we get a break on the economy sometime between now and 2026, and he can actually reterm this debt out further. Most companies do the latter, but this is where we're at right now. And this is good because it gives a full 3 years for the company to kind of get through it a bit. Let's see. There's a couple other slides I have. I wanted to just show this on corporate borrowing so you could see. Now, this is year end December 31st, and I thought I read this citation, but then I might have lost it. Sorry. There may be something even by the end of December 31st, barring all the other stuff that it doesn't get marked until January, including Antara, by the way. You can see the reduction in debt expense, which is corporate borrowings, this boxed line item, was down like you want to see that. I should have probably boxed both of them, but it's this right-hand side here. But he reduced corporate borrowing by almost 20%, 18.9%. In an environment that is basic rising interest rates. And it's very clear that it's hard to get high yield debt done, which is what he would sit at. This is very impressive and is part of the reason why I continue to think this management team really have shareholders' interests in mind, regardless of all the nasty bets that I get. All right, final thing. this actually page 134. I just want to give a shout out for people that are trying to understand what's going on relates to that NYSE rule that I did something on a video on just a couple days back, maybe a week back. You need to look at page 134 of the 10K, and then just put that, just look at my other video, and that should clarify that out. And let's see, other stuff. Okay. Yeah. And okay. And then finally, I just want to talk a little bit about some of my Twitter posts because um, I keep getting asked this, and there's a couple of strange things about this lawsuit. First of all, Allegheny is a pension fund, and if you look on their website, it looks to me like mostly they outsource almost all of their fund management. So I'm not convinced that this is Allegheny's board that actually, I mean, I don't even understand why they decided to sign on for this, because given what it looks like are their holdings, it's not big enough where they would want to be dragged through the mud. But the other part that's kind of interesting is they are not a very big institutional shareholder of AMC, and literally none of the other big institutional shareholders joined them in the lawsuit. So that should tell you something. But even above and beyond telling you something, the main thing that is being claimed in that lawsuit, despite what everybody else is saying, and there's a lot of nonsense that you almost have to sort through because you can't tell if they're actually trying to tell you something or if they're just a little bit full of it, or what is going on, or if it's just a short seller that's gone bonkers and been triggered by your video. But the net thing is this, right? The reason that there would be one of the biggest reason that keeps getting ignored as to why a hedge fund. Okay, first of all, let me actually give you some citations. They are going to be in my show notes, but I do want to give a shout out to this one guy on Reddit. So I am going to share my screen and give a little bit of love to this guy, because out of all, when I was doing my research, I was like doing this in a very manual, painful way. And I was originally going to do this much later, but because this guy did an amazing little write up on Reddit, I need to give him full props, because I checked his stuff just to see that it was true. I'm using a dummy account, so please don't try to find me at patient temporary 333. I'm not there. But this guy, Snack King 98, he's not making any claims other than do your own research, but he literally summarized everything that I was trying to look up, including like where to find it, etc. The only thing he didn't put in there that is also in my show notes is the actual lawsuit, the filing. And so I have put that in there because I found that from someone else. The major thing that's being claimed in this lawsuit is fiduciary responsibility as relates to loyalty. But realize he has loyalty to both the company and he has loyalty to the shareholders. But their belief is that he somehow tried to mess with the shareholders, or the shareholders wanted him to not raise capital or whatever it is. But that shareholder vote never happened. Okay. And you can see that in the timeline that's put together by Snack King, and just check it out. But that is actually the piece that is that fiduciary responsibility that they believe that AMC violated. And so that you don't have to be this lawyer whiz, or I don't have to be this lawyer whiz, I looked through a bunch of legal briefs on fiduciary responsibility, because actually it's kind of crazy if you think about it. If you're a shareholder and you really believe that the company violated something, you should get a bunch of other shareholders and get a board seat. Well, guess what? Allegheny hasn't even remotely tried to do that. The board approved it, as did the audit committee. And so that is that. And everybody wants to tell you all this stuff. You know what? It's still the case that you could get a board seat if you have enough voters. So you got to think to yourself, why is it that anyone would want to maintain that? Okay, so first of all, fiduciary responsibility. I have posted the legal brief that I thought was the easiest to read. There are probably other legal briefs that talk about fiduciary responsibility of loyalty to a company as relates to corporate actions of any company. It's a paper that was written in 2009. It talks about specifically Delaware law. Take a look. There are others since it's 2000, dated 2009, but it will give you some kind of place to try to make sense of it. Because I know a lot of people that watch me are actually shareholders and not just these short sellers trying to troll me. So take a look at that as a starting place for your own research. Okay. Other than that, people have asked, like, what is it that you think is the incentive for anyone to tell someone to vote a particular way if some of this stuff is a little bit ridiculous? Well, this math is actually really easy. I'm just going to show you the spreadsheet. What I was going to do is actually do this a different day, but I just want to show you very cleanly. This is the spreadsheet that I just drafted really fast. And some of you guys are like, oh, how did she do that? Turns out I actually have a stats master's. Okay. So, like, this is not hard for me at all. Okay. This is actually, I want to show you, and we're going to look at the small box first. Okay. This one right here. A borrow rate, as some of you gave me the heads up that you're seeing, is 625%. That is an annual borrow rate. Okay. The actual daily rate has to be, you have to unannualize it essentially. And that math, even though I know for a fact, I've looked on various, like at first I posted a calculator on my Twitter, and then I realized that was wrong because I realized that a bunch of the banks were posting a format of annualization that is a little bit awkward, for lack of, look, I legit worked at a financial company. I usually don't give my background, but we would have never calculated that way because quite frankly, when you do the reverse, you'll never get 625%. If you take this daily rate and you compound it, you will get 625%. I promise you. Okay. And you can do this math all you want. The math is simply 1 plus the rate to the 1 divided by the number of days, 365 minus 1. Now, sometimes you will use trading days, but not in this annualized every single day. So the daily borrow rate on a 625 percent annualized borrow cost that you're seeing from your brokers is only 54 basis points. Okay, 0.54%. However, if you'll look, and you can literally get the time series of end of day mark from, you can get it from Yahoo Finance. Okay, just go to the historical tab, download it, and then just calculate your returns, which is just today's close versus yesterday's close, all the way down. Create your little spreadsheet, and you will see an average return that's only 0.06%. But the more important number is what is the average up and downside day, and you can kind of see that, and then you can look at the standard deviation. Okay, now this is getting real mathy, so I apologize if this is getting way too mathy for you guys. But essentially, the average downside day is 5.03%. So I know there's a bunch of you that trade AMC, so you know that thing moves, okay? It moves a lot. And its average up day move is 6%, but its average down day move is 5%. So on those beautiful days when they're violating the living daylights out of Reg Show, and this thing is just moving consistently like that, they're paying 53 basis points to make 500 basis points, 5%. That's why it's worth it for them to drag this out for as long as possible. It's nuts, and it's really messed up in my opinion. And then if you want to calculate the reverse, you literally just do the reverse math, which is essentially you take whatever daily rate or in here I've put a 3% return just because I was just using the standard deviation. Okay. The standard deviation of the downside return is 3%. Sorry if that's getting too mathy for you, but essentially 66% of the time, the thing will be plus or minus 3%. But let's just say 3%, right? On a 365 days, that borrow rate to truly stop the shorts would have to be something astronomical. So I'm not even going to pretend like that's the number, but if you just put 1% in there, you'd see that the borrow rate is way too low relative to what's actually happening mathematically with the stock. So with that, I will stop sharing. I know that math was not the easiest. You know what? If you want more than that, put it in my comments. I'll do the best I can. But if you need me to do it because you're like a hedge fund, then you need to hire me. Okay. That's what it is, because I don't do that work anymore for a reason. All right. Now with that, I'm going to give David, I don't know what in the world these chats are. I'm sure they're kind of crazy. All right. Yeah.
Hi, man.
Oh, wait, let me get to a couple of these just to give you a chance to collect yourself now that you're on the screen, David. Yeah, you're right. It doesn't delay, the injunction doesn't delay the vote, but it delays they just wanted to give time for, in theory, discovery. And, this one I also give Tony Denaro a lot of credit because he has a video out where he is following some of the stuff on the courts, like line by line as it's being posted on Twitter. So again, big shout out to him. But it does actually delay any kind of ability to take action by at least 2 weeks, which essentially is 2 more weeks of borrow cost return for this whole set of people that are doing this lawsuit, which I find ridiculous. They shouldn't be able to they shouldn't be able to make money off of something that is designed to try to get the shorts out of the stock. That's what I'm saying. All right, go ahead, David.
Hi, May. Thanks for having me. This is such an interesting play.
It's such an interesting situation. How are you thinking about it? Because I know you
Well,
have done
last
something
time I
similar.
was here, we were talking about Fibonacci numbers. Remember the
Mhm.
Italian mathematician
Yeah,
from the Middle Ages, and a number was 467, and we said we should be buying it there. Not financial advice, but that's a Fibonacci number.
yeah.
713, then it retraced Fibonacci number to like 467, something like that. And that's also where Antera bought it. So
Yeah.
then it held there, ran back up. No, today the high 853, December high was 854, so that's why it stopped there. But there's a gap at 1305 from a technician's point of view. Gaps will be filled. So I think the most important part is the 337 double bottom. That's very important. So you
So
would
you're
be
thinking on the high side, it could go as high as 13. That's
That's where the
awesome.
gap is. That's where the gap is, right? Yeah.
That's amazing.
And
Okay.
today it settled 668. It's a downtrend line that was violated. That caused the breakout yesterday. So um, that should hold. Technically, that level should hold.
Okay.
That's
Um,
AMC.
that's
Now,
amazing.
Ape is really cool. Ape, I mean, that's an arbitrage play. To me, Ape, you have to be looking at Ape
I know, and he
because
said
it's
that on the call
three and a half
today.
times return right there.
He definitely said that on the call today, that that was one of the main motivating factors, because as long as Ape remains with this kind of way that they're doing it, it does decrease their ability to raise capital, which is, to me, um, the important point that all the hedge, like, I really, it's, I try so hard not to get conspiracy theory mindset, but it's so hard to not go there, because, like, I'm listening to Twitter and this hedge fund guy is trying to pretend like this litigation has, but like no actual understanding of what was actually like what actually the claims that were being made in there were. Like, they use the word dilution in that in completely incorrectly. Like, they pretend like dilution of the preferred shares doesn't dilute the ordinary shares. That's like so basic. I actually don't know another way to say it. It's like the epitome of the most basic financial term that they just get wrong. And there's so many things in that. Like, so one of the claims that's made in that lawsuit, which is part of the reason why, I mean, we'll see, because once it goes to court, it becomes something that is not normal, right? Like, that's why markets are markets. And when you go to court, you're really kind of like a little child crying, praying that someone's going to actually bail you out. And then it just depends on who decides to litigate. Now, she seems like a very clever person, but it is going to be her decision ultimately. Nonetheless, most of the things that they're saying they said about the shareholders, they actually said about the shorts. The 3D chess stuff was all oriented towards the shorts, not the shareholders, but it's all over that thing as out of context. So it's the most annoying document I've ever read in my life. Okay, hold on. There was
Well, a
one.
lot of the shorts are market makers, right?
Yeah, they
And
are.
Terra has to be short something because they forgave a lot of debt and they got Ape shares in return, right?
Yeah. So during that one period when it was unclear that they were going to have like two x the holding, I do think that there were some things, but overall, I mean, they still are sitting there with like 250 million shares right now. So people trying to pretend like there's something going on there are a little bit. Okay. Hold on. I want to make sure we answer this one question, because we do have viewers that are not from the US or English isn't their first language. The reverse split and converting Ape is one choice. It's one thing. He talked about it a lot on the call. And, the idea was that essentially he's trying to do one more corporate action, because the special meetings are expensive. And that's true. To be fair, every time they have one of these corporate meetings, it is ridiculously expensive, and there's filings associated with it, and. So he's trying to do it all in one shot, because ultimately, if you just have this, like, you got to feel for the guy. He's trying to get him out of bankruptcy. And, the shorts won't let up and the hedge funds keep finding really special tricks. So, given the low dollar value and the NYC listing rules, he just wants to take care of it all in one shot. That's what he said on the call. And I tend to agree with him. I get it. Other people are going to have different opinions, kind of is what it is. Okay. Go ahead. I interrupted you. What were you about to say, Dave? Sorry about that.
I was saying Antera, they have the vote. So I mean,
Yeah.
the reverse split will go through.
Well, I mean, they have to get
Antera,
50%.
Antera owns enough votes to if they
They
were
own
the
a
only ones voting.
They own a huge slug, but you do have to get 50%. So my calculations are you still need somewhere between 18 to 20% more votes to come in. And I don't historically AMC has gotten really close to 50%. So they need to clear the hurdle with 50% plus one other share so that they can have that majority that is in the actual initial documents for the ape conversion. Now, they're a huge part of the way there because I think like Intara is in, and I think it looked to me like in the initial reading of the proxy that Vanguard was in. I'm not 100% sure if that's true because they don't really spend a lot of time talking about that. But no, that actually they couldn't vote no even if they wanted to fly high and enjoy because by the terms of their agreement on the shares, they have to vote yes. That's in the original press release as well as the original filing for the proxy. So it's not possible for them to vote no. What else? Yes, Novocaine is right. This is correct. Now the stock is trading down, and I think that the stock is trading down, and I think like in fairness, this wasn't a good quarter. From my opinion, but at the same time, I wasn't expecting it to be a good quarter. From what I understand, a lot of the street analysts were actually seeing this as a better than expected quarter. But AMC is kind of its own special sauce animal, so we'll see. Let's see what we got. Antera is not allowed to vote. Only retail is allowed to vote. No, Joe, that is incorrect. Please stop listening to people that say things that are false. Every shareholder is allowed to vote. So that is actually a good tell because if you're getting someone that says that, they absolutely have no idea what they're talking about and you should stop listening to them. Okay.
But hey, I remember reading that vote will be in abeyance until the hearing. So you will not know how Antera voted, right?
Oh, that's probably true. They never really post. Yeah, you're right. It's usually so just to give a little back, David is right. The way that the vote will be taken as per usual. It was always the case that there may be not 50% that comes in at that time. So there was never a certainty that the vote would go through on the 14th because it required a full majority, which is why there's proposal 3, which will definitely go through and allows management to keep asking people until they get to 50 plus the vote that they need. Over the 50% majority, which is what it says in the the original August release for the creation of ape shares. But what David's referring to is that usually you get to see who voted right away, but it'll be in abeyance, so you won't get to see that for a few days. So that's correct. That's totally correct, but just for the folks that needed that definitionally. Okay, here's the thing. I just want to address this because this is a real confusion. You can only vote if you're a shareholder. Okay, so there's no extra voting if you don't have shares, if you own them some kind of weird synthetic way, if you own them overseas and it's through some kind of really funky structure. None of that. You don't get to vote. You only get to vote if you're a shareholder of record. And it's really crazy because they will write this and it really does mean you have to be a recorded shareholder in the system a particular way. So for example, if you bought it now, you would not have been a shareholder of record. So even if you were to buy it right this minute, you have to be a shareholder of record at the time that the proxy statement's issued. Okay. So to buy them now, all you're doing is helping shareholders. You would not necessarily be able to vote. Okay. So the judge will allow to be counted. All the votes, every shareholder vote. This one, great question, Aether. Sometimes I love it when you guys ask me questions because it tells me that there's someone else saying some crazy stuff out there. But Aether, you don't have to worry. Everyone that is a shareholder gets to vote. There is no one that's a shareholder that doesn't get to vote. In order for that to be the case, you would have to have a non-voting shareholder class. And since both shareholder classes are voting shareholder classes, in this case, everyone gets to vote. Now, a company, just for reference, that does have two different share classes, one that votes and one that doesn't, is actually Google. Google L is a voting shareholder class. Google, with no other letters after it, is non-voting. Okay, so just realize that it's not the case for every share class, but in AMC's case, both share classes are voting share classes. Great question. I'm glad you asked it because it tells me there's yet another crazy thing that's going on out there that I'm going to end up in my show notes getting.
Yeah, Wesley asked a question.
Oh, great question.
I'm,
Yeah, go ahead, David.
I'm big on double bottoms, and that 37. I mean, that's the main technical pattern. So it broke out above a downtrend line from the December high to February high, like 733. There, you draw a downtrend line, but it broke that yesterday. It went above it, went up to 858, whatever it was, and now it's right back down. So right back down to that downtrend line. So it would hold right here, technically speaking.
Um, yeah, that's awesome. I mean, we'll see because the stock is so crazy in the way it trades. Not investment advice, we always say, but at the same time, I got to admit, I've really appreciated that Dave's helped me with the technicals on this one from a personal standpoint. All right, hold on a second. Let's see. There was another question that was related to the boat that I just want to, okay. Ahern, I know this part is really, really confusing. It's because there's three instruments involved. There's the APE instrument. There's this middle instrument that's the actual preferred. So the APE shares that you're trading, the APE on the exchange, that's actually an APE unit. 100 APE units equal one preferred shared. But ultimately, when you do the math, because one preferred equals 100 AMC, you end up with one APE share equaling one AMC share. So it's just one for one. Everybody gets the same vote. Like one vote, if you're an AMC shareholder, you get the exact same vote as an APE shareholder. So hopefully that clarifies. It's if it doesn't, I do have a couple videos on it. If you just want to just know the citations on it, you can look at the previous videos. I have a whole list of AMC videos that's linked in the show notes. So feel free to check that out. But great question, because I know that comes up a lot. Did you see something, David? Oh, David, here's a good one. No, that was already answered. Oh, yeah, here. I think this was a good technical question. David, I think you might be frozen. Can you see that on the screen? Oh no, we may have lost David. Okay, well, he's trying to come back because I think maybe he got a phone call or something. Let's see. In litigation, two causes of action are being breach of fiduciary duty and violation. Yeah, the violation of Delaware General Corporate Law 242B, I go through in a previous episode because I think that relates directly back to the NYSE company listing rules, which are identical. So just, I don't know what that's all about. We're going to delete that or block you because I don't know why you would do that kind of nonsense. Add to block list. So you're blocked because I don't want that happening. And then okay. And then, sorry, let's see. Let me just bring that back up. Oh, okay. So the other, okay, sorry. So it was this. So the other situation I already did something about. So you can take a look at that. But the actual cause, the Delaware General Corporate Law breach of 242B is almost identical to the NYSE listing. You can see that one's fairly straightforward, and that's why I didn't mention it. But the other cause, you're right, there are two causes, but the other is the fiduciary duty one, which is right alongside of it. Both of them, in both cases, I mean, look at the darn financial statements. Like, you've got to be kidding me, with all due respect. Do you know what I mean? If this company had crazy, amazing financials, then yeah, but it's a really weird argument to be like, I'm going to stop this company from raising funding that it desperately needs to not go bankrupt. It's insane. And then again, like I said, half of the stuff that they're saying that is out of context. I mean, like describing the 3D chess game as something he's doing against investors, which was clearly not what he was saying in all those tweets. It was actually against the short sellers. Come on, with all due respect. Okay, cool, Robert. Thank you for posting that. That's perfect. Um, okay, let me just see what this is. If you bought shares owned by February 8th, you should be able to vote. Oh, okay. It does matter if you bought synthetics, because synthetics, depending on 99% of them, are not actually voting shares. So if you bought synthetics in the form of an option, you don't get to vote. If you bought them via swap, you don't get to vote because you don't own shares. If you bought them via a depository receipt of some sort that's created in your specific country, then you have to call your broker dealer and see if that you can get a vote. This was even mentioned, by the way, on the call and answered on the earnings call. Internet there, and we've kind of seen this in the past, but international broker dealers have their own desires and rules for whether or not they let you vote. And it's really unfortunate because the only solution to that is use this as a learning lesson to then move all your stuff out of that particular broker dealer because they're not going to let you vote. Last episode that I did, someone told me in Germany that only 2 of the brokers that he had investigated allowed him to vote out of the 3. And so obviously picked between the 2. Yes, Aether, it's totally true. It is always crazy until it isn't. How would the hedgies would like to see the investors vote no. And that is because, and I will show it one more time, that is because they make money off the borrow rate. And let me show you the math on that really quick so you can see it. Hold on, let me go back. Here's the math, because everybody likes to talk about the hedgies, short, blah, blah, blah. But there is a set of hedgies that literally just owns these stocks and collects the borrow. Right now, the borrow is 625%, which costs them 54. It pays them 54 basis points a day, but they could also at different times. So both the hedge funds that are just long these stocks for collecting a 54 basis point return, which if you multiply that out is between 2 and 3% return a week, they would love for you to vote no so that the arbitrage continues and the borrow rate continues to be high. Then there's a set of hedgies that are cool with it. Arbitrage exists. This is your standard deviation right here on the stock. You got crazy trading associated with the fact that basically you have a weekly violation show. Okay, so the hedgies would love for you to vote no. I don't know why people are coming out pretending like the hedgies want you to vote yes. That's crazy. And they're trying to use this whole nonsense out there. Actually, I do know why, but the logic is massively flawed because this actually is very much so something they're making right this minute, not consequentially, not potentially, not in 3 months, if and only if it happens. And also both shares trade a particular way. This is happening right now. And every day they delay, they collect another 50 basis points. Thank you. Okay. That's my answer to that question. It's a little passion because I've had quite a lot of special stuff in my comments. Okay. What else do we got?
One question: what does the reverse split really mean? 1 to 10.
Oh, okay. That's a really good question. I have a couple of videos on that show the math more directly in case you're more visual than auditory. But essentially, what will happen? It really is like if you have $10 bills and then you get a $10 bill, you give me the $1 bills and I give you a $10 bill. Or if I have 1 penny or 100 pennies and I give you $1 for it, it really doesn't change anything except increase the market price. Now, from a trading perspective, there are people that just love volatility, and the lower trading prices do, if you do the percentages, look like there'll be a lot more trading volatility. Now, the fact is AMC's been volatile this entire time. So if that's the reason that you're worried about it, then you should just know that this is going to be volatile until the short thesis is gone. And some progress was made, in my opinion, on this quarter, but fair and square, other people may disagree with me because it wasn't the most beautiful quarter. There were definitely some things, but I saw the things that I personally was looking for. You guys can rewind this and just see the front part of this where I go through the earnings quarter and figure it out that way. I'm not sure what you're saying, Gerald, but yeah, that's kind of that's kind of what it is. It really just increases the share price. It should do nothing to your percentage of shareholdership, and it should do nothing to the total. It shouldn't do anything, but people think it does.
Well, if it's split, I mean, simply saying, if it's split today, The closing price is 714. If you had 100 shares at 714, you would now have 10 shares at $71.40, right?
Yeah, except that there's a spread between the two, so it does a little bit more than that. But yeah, you're trying to simplify it to make it easy. It
Same
just
exact value.
yeah,
Same
reverse
exact.
split in general. Yeah, reverse split in general, just you just add as if it's 10 to 1, you just add a zero at the end. But I do have a video on that, so you can see the reverse split plus the reconvergence of the two shares, which the math is slightly more complicated for that. I'm not gonna lie. So okay, I'm not allowed to tell, and I won't tell you how to vote. I'll tell you how I'm going to vote, but I really can't tell you how to vote. You got to kind of you got to, go through all this and see what you're, what you want to do as far as that goes. So I'm going to be really careful about that because now I know everybody's really sensitive to this. But to me personally, for me, it makes sense to vote yes. Because here's the thing, I don't really, I like some volatility because the girl wants to make a living, but at the same time I don't like insane volatility, and I also don't like the type of volatility that is there simply for someone. i mean like it's really, I find it really messed up, right? Like, you're basically telling people which way to vote as a hedge fund because you want the volatility to persist so that the borrow rate stays at 600%, so you can make money supporting the short sellers. Let's just call it what it is. I think that's despicable. This make money the fair way. Okay. Like, invest in good companies, sell them when it's the right time to sell them, be fair and square about investment, but turning it into a casino, I'm never going to support. If you overpay.
It's 1-to-1 convert APE to AMC, 1-to-1, right? Then they'll do the reverse split. So Jorge will have, instead of 5,000, he'll have 500, but it'll be 10 times the price.
Yeah, that's correct.
Okay.
Big Ray, I hear you, and I know you're always a real big supporter. If you overpaid, whether they do the reverse split or not. There's not really much you can do one way or the other. That one, I mean, look, I wasn't there telling you to buy it at 72. I'll tell you that much. But do I think it could go back? I think it has to get past all of these things that are happening right now. It has to prove itself as a company. I do see that it will do that. From a fundamental perspective, I have some thoughts. If it got too expensive, I would also, it would not meet my investment criteria, and I would have to sell it. Right now, it's a turnaround, and it's trading like a turnaround. So it actually, especially on the ape side, when I suggested it, it made a lot of sense because I'm getting such a massive discount to take that risk. Haha, Belle Biv DeVoe. I get it. It feels that way sometimes. I know.
You don't add the price of AMC and APE. You just convert it.
No,
People don't understand that. I mean, even though AMC is trading 3.5 times what APE is, it's still 1-for-1.
yeah, it will be
Your
one.
APE share will be whatever AMC is that day.
Yeah.
Right?
I mean, there's a couple different ways to think of it because the APE shares and the AMC shares will merge. So technically, the value of the shares will be probably the difference between the two values. The arbitrage will close to zero. It'll close to zero as soon as the announcement happens. So quite frankly, when that happens, the APE shares will trade right up, and so will AMC to the same number, such that the reverse split happens that way. Right now, if you're trying to get an imputed price, then you would do the math a little differently. I think that's where everybody's getting confused. But David is right, because on the day of, once it's announced, everything's going to just collapse. The trade will completely collapse, as it always does, by the way, when you have a reverse convergence. The other place that it does this is merger arb, which David's very well versed on, and I've watched it a couple times, and occasionally I've both dipped my toe and gotten burnt, and dipped my toe and made money. But yeah.
Yes, Hollywood. Exactly.
Yes. But technically, yes. The only thing is, if you're trying to do an implied price right now, a lot of people would take into consideration the ape shares and the fact that that convergence will happen usually like a sandwich. But quite frankly, if AMC's trading up like crazy and ape's not following, it is also possible that enough momentum happens on the ape shares that AMC just trades up, and ape just trades up and AMC does nothing. Like, on the day of, all bets are off. I can't tell you what will happen on that day. You know what I'm saying? All I know is that if it's announced that all of this goes through and we get past this litigation, then those things are going to be worth the same. It'll close, and then everything Dave is saying is 100% correct. Let's see what we got here. You're not going to lose 90% of the shares. Eddie, definitely have a look at some of my earlier videos, because this is something that a lot of the short sellers are saying, but they also are saying it in the weirdest possible way, which makes me think that they're well-meaning, but they actually just don't know about some of the more, I don't know a nice way to say this, basic parts of finance. I don't know a nice way to say it. I'm really sorry if you're a short seller that made a video on this. Maybe just take it down, because that's incorrect. That's not what a reverse split does. I don't know a nice way to say it. I'm really sorry. Sometimes it's not easy to come up with a nice way to say some things. Jack J, that's awesome. You know what? Number one, it's pretty awesome that they do listen to shareholders, and you can always email directly to them. That's one thing that was said on the earnings call today, and that's probably why you're mentioning it, Jack J. Is he does actually legit read everything that people send him, both on Twitter and via email and all that stuff. So, give it a shot. He seems like an open-minded person.
Mate, do they have any competition? I mean,
At this point, is a really good question. It would be international, because it wouldn't be domestic anymore. Everybody's gone bankrupt.
okay.
You know what? This is a really good question for you, Dave, because this one's really like, okay, so you still have the lawsuit pending, but if the vote passes, I think that they won't tell you if the vote passes or not on the 14th because of the nature of the lawsuit. That's how I was reading the most recent news. But honestly, the most recent news is coming out fast and furious on exactly what's being enjoined as relates to this vote. But I think that given the nature of the court system and I don't put it past anyone. If actually he gets enough votes, that stuff will leak so fast it's not even funny. And then it's a really good question. What do you think would happen if it leaked out? Let's just say it leaked and the vote passed on the 14th. You think it would be an immediate halt, or you think it'll just gap up, or what do you think it'll do? Or do you think we just have to wait till closer to day to see how the stock's behaving?
Wow, that's a
Good question.
leak. I don't know. No, they're not gonna. It's gonna be that's what abeyance means. They're not going to reveal anything until the hearing.
But what if it leaks, Dave? This whole world right now is so nuts. I wouldn't be surprised like if it leaked. It's a good
I wouldn't
question,
believe
right?
it.
Okay,
So,
let's do this. We're going to answer. We don't know the answer. Neither one of us knows the answer. There you have it. There's a lot of times when I answer that way because I really don't know the answer, but I think it'll be a fun place for people to conjecture. But, you still got to kind of think of it a different way. Bit of wisdom. My friend lost a tooth. I don't know if you're telling me I also lost a tooth. I did too recently. That's why I was at earlier today. I was at the dentist. So I'm not sure if you're just
what
giving me
happened to your tooth?
what's that?
What happened to your tooth?
You remember back in December when I was
don't remember exactly.
Oh, I did the stupidest thing. My laptop has very sharp edges, and somehow
Oh,
I hit my tooth. And it's interesting because I learned from the dentist today, because she was looking at my, he had like a different,
we were shutting the laptop to hit your tooth.
it was weird. Like, I can't even explain why I did. It was so stupid, but I essentially busted it out. So I have, and I wish, like, I'll have to show you guys some other time, but like, I literally have a screw and then a cap on my tooth. It's a temporary, but it's like a long story. Listen, I'm sensitive to that, but like, it is what it is. But people tell me that a lot of people have implants, feel free. Oh, he lost his wisdom tooth. That's funny. No, I unfortunately lost my number 8 front tooth. So I couldn't possibly be more unattractive without it. I'm not gonna lie. I thought that's what you're referring to. But yeah, unfortunately, I've got about 2 more months of dental work, and then I still have to go and get a permanent tooth there. It happens. I'm a real person too. Oh gosh, there's so much interesting conjecture on the on short squeezes and stuff. Dave, can you say a little words on some of these questions that people have? No stock has made a squeeze after
Well, I
a
mean,
reverse.
on a short squeeze, I think a lot of those, and my hat's off to them, come those Reddit guys, the Wall Street bets. I mean, they did it to GameStop. I mean, if they're interested in AMC, I don't know. Maybe the float's too big. I don't know.
Oh, okay. Let's do this one more time just for an RC modeler. I do have a full video on this in case you're more of a visual person. I'm more of a visual person, so I like to see the math like in front of me. So that's why I say it the way I do. But I do have a video on reverse splits. But let's just try and see if we can talk through it. The value. Okay. So what happens is all they do is they take the full market value and then they just divide it by the new number of shares. So before, like right now, there's 1.4 billion ish shares between the two share classes. And afterwards, there'll be 142 billion shares or 142 million shares. So it'll be like dividing the total number of shares outstanding by 10. And that will also mean that the price will be increased by 10. um some people are really much more visual, so I apologize if that is not easy
No,
to
that's a perfect way. Yeah, that's a great way.
yeah, it
And
might be easier to see the math.
the reason he did this is important because short sellers were going to push him down to a buck. And if you get to a buck, you get delisted, right?
Yeah,
And he was
unfortunately.
running out of cash and he needed, financing. So I think what he did is brilliant.
Novocaine's teasing me for the laptop. Yes, it is like the most ridiculously sad thing. And I was visiting my parents in Florida, so I had to have a denture for a while. I'm not even gonna lie, you guys. Like even the late I wore a denture for like 3 weeks. It was the most upsetting 3 weeks. I was like so bummed. Sorry. I think most investors aren't just afraid of, yeah. Johnny, that is right. There is a bunch of, if I understand you correctly, Johnny Five, um,
That is not true, right? They're not going to
the,
lose any shares.
yeah, it's yeah. I think a lot of people there are a type there.
No,
Okay,
I'm saying that wrong. They're not going to
yeah,
lose any value.
yeah. You won't lose any. Like if you're an investor, the vote is really straightforward. If you're a day trader who really loves volatility, then you might have like a preference to have the share value lower, which is a thing. There are some people that like specifically to trade low dollar value stocks. So for those folks, I kind of understand where they're coming from, but that's a really that's a it's too selfish a reason. I'm sorry. Like the rest of us shareholders actually hate that volatility. We think that the company should just be able to do what it does in peace. Do you know what I mean? And what I mean by in peace is that the shareholders want them to execute a very specific set of things that they've told us and they keep telling us each quarter, and that they give us progress reports on each quarter. And we want that to be the focus of what it means to invest in AMC, not day trading, not hedge funds trying to find every single loophole to make stuff, not people making money off the barter rate and trying to get a bunch of misinformation in the marketplace. We want all of that to stop so we can focus on how to make AMC a great business. Okay. But other people, they're in it for different reasons. I don't know the answer to that, so I can't speak for everybody, but that's more my deal. Yeah. So hopefully that clarifies. Wow, there were so many questions. I think they're all around the same theme, and I know a lot of people have a lot of low float stock. Mike Bauer, you want us to just give a few words on that? Actually, Dave, this might be a good one for you from the trading side. I have some thoughts, but I feel like this is a more obvious layup for the way that you think about things, and I'll miss a few.
Low float means outstanding stock. If it's low, it's easier to short. It's because it's less liquid. If it's really liquid, like you would never see AT&T being, you'll never see a short squeeze on AT&T because there's just so many shares outstanding. The float is so big. But what happened with the GameStop, the float was low, and the guys at Reddit figured it out, and away they went.
Yeah, cool ringtone. Yeah. Now the other thing is, the squeezes in particular. The shorting side has one dynamic to it for sure, but the squeezing side can be particularly amazing as far as like how much it jumps up on when the float is lower, and that makes it significantly more dangerous for the short sellers. Um, oh, Mike knew that. He just wanted to give a heads up on that. That's sweet. Thank you, Mike, for prompting us on that one. will anything happen? We'll get that squeeze. You know, it's always hard to say on the squeezes. I'm terrible at the MOS stuff. I don't know if you've got thoughts. David thinks that on the Fibonacci, it'll retrace to 13. Is that what you're saying? You were saying
No, no,
earlier?
no. That's not Fibonacci. That's a gap, and it
Oh,
doesn't
the
happen. It doesn't happen. Doesn't have to happen. It'll happen someday, maybe a year, maybe 2 years. I mean, gaps are filled.
Some of you guys are really funny on my on these comments. Good. Lemon juice is good for you. Get your vitamin C in, Gerald. um, if the AMC portion of the vote passes, the litigation is moot. I have mixed feelings about that, but I don't know the answer to that from the legal side, to be fair. But I do think that it's a weird argument to make given the financials of this company, that the reason they're raising capital is to hurt the investor. If this company had a lot of capital, maybe, but this company is literally doing everything it can to reduce the debt load and improve cash flow. So I'm hoping that the judge is like is someone that feels very confident when reading financial documents, which it looks like she probably would be if she's been appointed to do this type of case. So, you know, it's a little bit insane. Um,
Phil,
the house, yeah,
Phil, for real? Can you hear me, man?
yeah, Phil
Um,
for real.
could you go over? He brought up. Can you go over the FTDs? That's
Oh,
pretty
okay.
interesting.
What specific aspect of the reg show stuff? So the fail
Yes.
to delivers, the fail for okay, so fail to delivers essentially with reg show, and I know that Phil for real knows this, so he's just prompting to give some information
Oh,
on this for
okay.
new people. But so fail to delivers. Okay, so first of all, the market makers allowed to trade in excess of the share count, 0.5% of the total shares outstanding. The failed to delivers are the official count of how many shares are over the total shares outstanding. And as long, so it's always going to be on the threshold securities list if it's over that number. Now, with Reg Show, you actually have to be over that 0.5% to be truly in violation and then asked to cover. And then if you don't cover in a certain amount of days, they will fine you. However, and I was showing this to David just earlier today because he knew that, but he was like, how bad's it been recently? And if you look at it, it's literally like 5 days and then back down to what is still like totally unacceptable. And it just keeps rocking back and forth. And that's part of why there's a, you know, given that, okay, so that's just the total shares outstanding. The float, because so many shareholders are not lending their stock, is even lower. So there is this really strange situation where you have it's totally a ridiculous it's a ridiculous situation, Phil, and I agree with you. um what happens to failed to evidence that? Okay, so remember, the synthetics are totally a different animal, and this is one of the challenges of, like, even if they could fix the failed to deliver piece, the synthetics, because what they are oftentimes ooh, sorry, I'm pressing too many buttons here. Because the synthetics are not actually attached to the stock, they're just linked to the share price swings. It's not really, it shouldn't be part of the fail to delivers, because you're not actually shorting stocks, you're shorting a note. It'd be like with the VIX, you can short as much of the VIX as you want, or you can go long as much of the VIX as you want, because there isn't anything but this thing in the middle that's tracking the price back and forth. And this is something that does exist if you're a foreign shareholder. And it was originally done so that you could get exposure to companies overseas without having to, you know, for example, if you really wanted to buy AMC shares, in a lot of cases, unless there's like a certain setup, you might actually have to open a brokerage account in the US, follow US KYC rules, follow US tax legislation, and then buy the shares here in the US. These now there's depository receipts that are set up overseas for a number of stocks that take care of some of that for you. And then there are these synthetic notes, these linked notes, which I now people are calling synthetic, but they just used to call them equity linked notes back in the day. Maybe at least where I was, that's what they would call them. And so those things literally are only linked to the price of the stock and never have to be accounted for any one way or the other. Now, while that's the case, the broker dealer still has to actually make sure they risk manage that properly. And there is an argument to be made that this risk management is not being done in a way that makes sense. Now, that said, and I have to like prepare something more formal for this because I was thinking about the other day. Right now, it's possible that so it wouldn't be the SEC that would be necessary. I mean, the SEC obviously has some say because this is still equity like product, so it would be regulated by the SEC. But the real way, if it's the broker dealer that's responsible, it actually would be the BIS, the Bank of International Settlements. And what they would do is require you to post more capital against these things versus just trading them a certain way. So it's possible that, and I will have some people on there a little bit smarter on that, specifically those types of bank regulations that might have thoughts on that. I'm not 100% sure because it's really nuanced. But the capital tiers, it could be the case that the BIS could get involved and force greater collateralization of swaps. That would be one thing that could be done. But honestly, I don't know what it is exactly the broker dealers are doing to collateralize against those swaps. So, and that is really advanced for tonight. So I won't even try to answer, but it's just something that occurred to me the other day that it may not be the SEC that you guys should be so upset with, but maybe the Bank of International Settlements and how they're collateralizing that portion of the business. And you would have a legitimate argument, by the way, because that is exactly what happened in Archegos for Credit Suisse, is they didn't collateralize. Oh no, sorry guys, I had a phone call. They didn't collateralize against that. The swaps, Archegos didn't collateralize, like the broker dealers, specifically Morgan Stanley, who lost $1 billion, and Credit Suisse, which basically I think lost closer to 3 or something like that, and it's taken them a lot. You might have something there that's relevant.
Have you run any numbers on, say he does gangbusters and everybody's going to the movies again, and AMC was a deal, and then I mean, have you put a price on, say, give it a fair multiple, and say we go back to 2017 and people are going to the movies again? So can you have you figured a price?
Not yet.
Okay.
Not yet. With the release, with the recent stuff, I don't have a great answer for that. I'd have to really look at it, and part of it is that I probably won't have a great answer for that until like after we get the vote through, because like there's a big like, first of all, there's still a spread between APE and AMC, so the multiple that currently APE is trading at is totally different than the multiple that AMC is trading at. That said, you are right, most of the pop on the short side is going to be from AMC, so it's really choose your own adventure on which one and how your investment style is. And then obviously there's still litigation risk because, like I said, even though I can say all day long what I'm going to say, and you guys can personally study the two links that I put in the show notes, both to the actual litigation that was turned in, and also the legal brief that talks about fiduciary stuff. And you can look at my last video where I linked to the NYSE company listing rules. And you might have your own feelings about it, but when it comes right down to it, when you go to a lawyer and you litigate in court, anything can happen. That's why insurance companies always try to settle with you in advance of going to court, even if they think they're right. It's one person's decision, so that we kind of just need to know. I'll have to take a look. I'm not sure which precise rule, but if you're talking about Basel 4 doesn't look like it's going to do much. But I can take a look at the specific litigate. If you want to just later after this closes out, or on my Twitter, just send me the link of what it is that you're seeing. I'm happy to take a look. Yeah, there's still some confusion. Haha, that's so funny. Sorry, my friend's call came in so loud. If he did it intelligent, he could cover and wipe the companies. Okay, little keys. That is funny as far as it goes. I don't think he'll play around with it, though. To be fair, I know there's a lot of different ways that they'll figure out this debt, but I think they'll do it in the more normal corporate way. I will say that it is interesting. The debt part of the 10K, fair and square, is very difficult to read through, and the actual news release simplifies it a bit. And I would encourage everybody to read it. And right now, what he's doing is literally buying back the debt at a fraction of what the debt is at. So it is literally like, I borrowed $100. You're cool to like end it at $50. You know, it's like when your deadbeat friend asks for $100, and you know that really some of that is a gift and some of that you might actually see back. You know, for whatever reason, that's how the debt is trading right now. And whenever he does that, it does lower the debt burden. It takes a little bit away from cash, but the ongoing interest expense is pretty good. The other thing that if you're analyzing this and you're a hardcore analyst that I'd encourage you to look at is look at what those interest rates are. He did retire some of the 12% debt, and then he retired some of the 5 or 6% debt. And I think that's because he's buying it off the open market, period. So some of the debt holders may not be selling it, is what I suspect is happening there. But I don't know because I'm not on the inner workings of AMC. It's just how it might typically work. Okay, I think we're coming close to the end of questions.
Okay,
Actually,
2017.
that is true. Yeah, Novocaine, this is true. This is actually what people that are very close to bankruptcy that ask people to help them get debt relief. This is 100% exactly what they do. And also, by the way, yeah, definitely if it's a real thing. Check it out. Even individuals can absolutely renegotiate their debt and pay it down a certain way. I don't know. I'm not going to comment on GameStop. Sorry, Phil, for real, because I'm not prepared for that. No shade to you. I just want to be more prepared if I'm going to talk about it. If you had to guess at the okay. Some people suspect. Okay, so on this one, I actually don't know. I mean, I think people mostly vote yes because I think that for shareholders that actually care about the company, they just want some of this nonsense to stop. But I can't tell because when I look on Twitter and I see just as many day traders that own this stock as I do people that are like really upset. So RC Modeler, I really don't know the answer to that.
2017, 2014 to 2017, it traded at an average of $30 a share. That's
Yeah.
pre-split.
Yeah, I mean, some of that was because the shareholders were just buying it to try to help him out of bankruptcy. Devil's advocate, it depends what you mean by this. Proposal 3 allows him to keep requesting from shareholders that they vote. The other thing to note is that he would probably raise capital off of APE, which he can still continue to do because there are remaining shares that he can still use to raise capital using APE. But ultimately, the right thing for the company is to recapitalize itself or alternatively start becoming profitable. We'll know on the next quarter what's actually happening this quarter. This quarter so far, some of the movies that have come out really strong. And then we'll know kind of the initial results from the popcorn sales, which I know sounds really crazy to say, but if the initial sales are really good with Walmart, then you could actually see some pretty good growth there. Because remember, that's probably done as a licensing agreement with somebody who already manufactures popcorn. So it's not really it's a licensing agreement such that it's just a cash register once it starts to sell properly. It should not be, given the way that I think it was done, a huge drag on operating income. So if we start to see that licensing agreement start becoming profitable and we start to then hear about the other potential, because I think that is a proof of concept. The popcorn thing is really a proof of concept on whether or not the AMC brand has more legs than people think. And so it is actually much more exciting than people want to give it credit for. It is not just the sale of popcorn. Phil, for real. Okay. All right. So I think we're coming close and it's already been about an hour and 18 minutes. Your cost average should increase such that you have the same percent increase and decrease. That's this one. So the what you really care about is the percent return, because that's what matters for accounting. If you care about anything else, I really don't know what to tell you, but it's really market value and market value that the accountant should be doing. If they're doing anything else, then I recommend you get a different accountant, with all due respect. But the market value that you bought the shares at and the market value after the reverse split will remain the same. So there should be no change to anything that your accountant will do. But if you have a poor accountant, they may not know what to do, in which case, please find a better accountant. Anything else?
Mate, Persignor Goldman Sachs, and I'm a big client. Sell me on AMC.
I mean,
Pitch
I
me
think
on
the
it.
real thing with the AMC is it's a turnaround story. So,
Right,
I still have to do more valuation work post this earnings, but they really are the last man standing. I mean,
right.
they essentially, after all this is said and done, have a monopoly on what I call the in-person film distribution business. Do you know what I mean? So, like, if you, so with, and then they have this massive brand that they have yet to truly fully monetize, in my opinion. We will know in the next quarter or so whether that's true or false by how much popcorn they sell, quite frankly. They're already starting to license out the AMC brand to other countries. And that is a franchise business, and franchise businesses in certain types of markets are quite profitable because they're asset light, meaning that you don't have as much friction on the operation side. So the operation expenses are far less for a franchise business than they are for someone that has to run and operate a physical business. So I don't, if they can just get past this crazy financing situation, then we shall see. Eddie Pierre, I did go through this in the first part, but as a quick one liner, and then just watch the first like 15 minutes of this on the replay, which is exactly the same link. It depends on what you were expecting, and I think expectations were all over the place. Is part of the problem. Additionally, some people looked at the posted number and they didn't realize that. I mean, some people refuse to use an adjusted number in any of their analysis, but the adjusted number is appropriate because of all the impairments and also the specific corporate expenses that are associated with refunding all this stuff. So it really depends on what's going on there. Okay, it's not falling from corruption. All right, I don't
Did
know
you
that
buy
there's.
popcorn?
I tried to, but there's okay. Look, if you go, there's no
Like a
Walmart
Walmart.
in New York
There's no
City.
Walmart in New York City, is
There's
there?
no new Walmart in New York City. And so I tried to buy it online, but I don't think, like, they did a small batch production. So it's available in certain Walmart stores. If you go to Walmart, Dave, I don't know if you're too fancy for Walmart.
Oh, of course not. I'll be happy to go to Walmart.
I don't know. I have some female friends who are like, oh, I'm too fancy for Walmart. I'm like, I'm not. I just got my tooth knocked out. Do you know what I'm saying?
And
I'm
I'm
wearing
from
dentistry.
Florida.
I'm too fancy for anything anymore. Do you know what I mean? But let's say if you find it at Walmart and send it to me, I'd be thrilled because I would like to try it. I'll just have to eat it away from my tooth so I don't have any problems with my dentist.
I'll go look.
But yeah. Um, Either I'm gonna let me know what you think I should do a poll on, and we'll take a look. You might need to put it in the comments. I'm gonna go ahead and close this out. Little Keys, you're awesome. I don't have a car either, by the way, even though I'm very positive Tesla. I have to rent one to come out to you, but that's really sweet. I appreciate that. All right, we're going to go ahead and close this out. I really appreciate you guys watching this and supporting me. Real thank you. If I didn't give you a shout out, it's because sometimes on these live casts, I get just trying to read all of these, but I do appreciate all of you guys that saw this. Dave definitely appreciates that you guys come. We have a really good time trying to answer your questions. And all right, guys, take care. Till next time. Bye.